Because I'm bringing this video to you on Sunday evening, I'm not going to be coming out with a video as regularly scheduled on Monday. And we just experienced one of the most drama-filled weeks since Lehman, and it looks like we're going to do it all over again. Over this weekend, Saudi Arabia decided to flood the market with deeply discounted oil in a desperate attempt to crush the competition. In doing so, everything seems to be crashing. So what happened? Well, Morgan Stanley stated that the Fed would need to announce a rate cut, but also needed to resume official quantitative easing. And with that, the S&P 500 futures are down hard and chaos is reigning once again. Monday will likely see stock markets plunge along with the price of oil. Additionally, the VIX, also known as the fear factor, will likely spike hard and bond yields will likely reach toward extreme low levels. So, what's an investor to do? When we find ourselves in this kind of market, it seems like the sky is falling. But remember, we have been here before and it will pass. So, what should you do now? Well, being on this channel is a very good start, but here are some additional tips. Number one, have investment discipline. Make sure you understand why you're entering a stock, but also have an exit strategy. Markets change all of the time, so take profits, reduce risk, or eliminate distraction stocks. One can no longer buy it and forget it. Number two, buy and hold is no longer a strategy. Even Warren Buffett repositions Berkshire's holdings all of the time. An investor needs to monitor holdings and make good changes when needed. Understand that information is king and speed is the king maker. Information goes around the world faster than ever. And that's why I try to get this information to you as soon as possible and hopefully before others. Who else is giving you this message on Sunday evening? Just be prudent with the information and don't make hasty decisions. Number four, be careful of what information source you use. All one needs is a Twitter account or a YouTube channel like this. Just be careful of what you consume. Remember, most of today's so-called experts were likely in grade school when the great financial crisis hit. What I tell you about my investing may not be appropriate for you. Only you know your portfolio and your tolerance level. Number five, remember that fear sells. Don't ever get caught up in the emotions of the day. Step back, take a breath, and look at the information logically. And that's why I turn to the charts. They don't lie. I may not always read them correctly or timely, but I never have to question the source. It's pure fact, no bias, and no spin. Number six, remain calm. This may be difficult when your life savings are evaporating. Markets are very reflexive when they're at extreme deviations. Markets moving as quickly as they have over these past few weeks can be scary. You will come out on the other side. If it helps you sleep, work with a good advisor. They will help you complete a plan. Investing is difficult because we let our emotions get in the way. So try and remain calm and keep your self-control. Stay rational. And lastly, just because we can do something doesn't mean we should. We can often be our own worst enemy. A study by Dalbar in 2019 showed that since 1988, the stock market's average return has been 10% per year. However, stock fund investors have earned only about 4.1% annually. So what's the difference? Well, it's all fear. We buy high and sell low. It's very hard to break the pattern, but with practice and patience and a little self-control, you can become a successful contrarian. So take your time and think out your strategy. And for today, that's ChewDog Charts, and good luck.